Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: commodities, wealth building, and or financial topics. So let's dive in. Let's take a look, and I'll interject what I think is, well, my opinion, I guess. So let's dive in here. If you want to follow me, it's at finding_finance. And if you want to follow and join our community, finding-value.com, that is where you're going to get a leg up on others, where I use my technical analysis, I use my fundamental analysis, and I select companies, and you guys can see the companies that I'm buying when I'm entering the positions. And I think you will learn a lot from that. I wish I knew what I knew in my 20s. I would be probably at least 10, 20, 30 times richer knowing what I know today and implementing it in my early 20s versus implementing it 10 plus years later. So, what you learn in terms of value, I think, is something that I wish I could have gone back and learned if I knew what I knew. I wish I could do that. But so scrolling down into gold ventures, did you know Silver Squeeze 2.0 is an exact symmetry of Silver Squeeze 1.0? Patience is the art of war. The East waited exactly 2 times, 574 days from the bottom to make their move. Now, 1.4 billion Chinese citizens are buying silver. In China, crypto is outlawed. Imagine the consequences. This is a buying wave without an end, in this person's opinion. So, this is the 574-day action, basically a fractal inverted up and over. And we are starting to break to the upside of this. And hopefully, we get some momentum and keep that momentum going in silver. I am a very big believer in silver and a big holder in it. Obviously, it'll benefit me if it goes up. So Thomas Sowell, he says, I've never understood why it is greed to want to keep the money you have earned, but not greed to want to take somebody else's money. Yeah, I think Thomas is obviously right. It isn't greed to keep what you've earned. What it is you've got a bunch of jealous people that don't want to work for crap or figure out how to play the game. And then they want to take it from others that have figured out the game and or have worked very hard. I view those people with very low, how can I say it? I don't view them very well. I'll put it that way. If you want a different or a better life than what you have today, go get it. Go take it. Go learn about it. Go figure out the game. Go do what you need to do to get where you want to go. Don't sit there and complain and try to steal from others. That is not ethical. And to do that with a third party called government is definitely not cool, in my opinion. It's not okay to use a third party to steal a person's wealth and personal property away from them. Not okay, in my opinion. According to Gas Buddy data, week to date, Sunday through Thursday, U.S. gasoline demand is up 2.3% from last week and 0.9% above the 4-week average. Every day this week has seen a rise over the last week. I know I've been using more gas. We've got better weather here, and I've been filling up our cars more frequently because we can actually go drive somewhere and be outside and not be cold. So I'm getting my nicer vehicle cars out and starting to use them, and I'm sure a lot of people are as well. I'm seeing it all over the place. A lot of motorcycles out too. A problem in many businesses, particularly the more bureaucratic ones, your employees retire, but they don't tell you. That is correct. The bureaucratic companies, the ones that you basically lose motivation. So your employees just sit there, they stop working, and they just continue to be on the payroll. So they retire before they actually retire. So yeah, I see that a lot at the companies that I worked, which are big Fortune companies. They also kill your motivation to move up and stuff like that with some of the stuff that they've implemented. So yeah, I totally agree with this. Gold had a historical mega breakout 15 weeks ago. Silver has cleared 2650 level and is about to take on the $30 level. The silver miners should start to outperform just about everything. The strong gold company leaders we bought at the service have just been beasts. They are still up multi-100% gains. From major precious metals lows, gold had an 8-year cycle low back in 2022. Larger gold company leaders move first, so must have those then. Most of them have been. After that, the larger silver producers move, and the strong silver company leaders we bought at the service at the lows back in March this year are still up this amount. The largest percentage gains are always from the very lows. Profit is made when you buy. When a bull resumes, it is vital to change mindset. One cannot play a bull with a bearish mindset. If you doubt the bull, you will not be able to change mindset. You have to believe in the bull, or you will end up being a victim of the wall of worry, i.e., your own emotions. And big declines happen to flush out excessive bullishness, reset sentiment, and start again. One has to resist going on the roller coaster every time in order to survive mentally and to succeed in trading and investing. Most will change mindset way too late and buy close to a top, as usual, like they did last time. Rinse and repeat in the completely wrong way. So this is SILJ versus GDX. It's about to break to the upside. You need to get bullish based off of chart patterns, not based off of sentiment and emotional price movements. I agree with him. He's completely right. We could see SILJ do some crazy stuff here. I'm already positioned in it. I've been waiting in it, and hopefully we can get a very big move in the silver junior mining companies. Dow equals 1. This is the median home price measured in ounces of silver. As you can see, we've got a little bit of a squeezy up here, and we could get a move to the downside of potentially about 90% lower, where silver outperforms home prices. And that's where we could get a big move in a purchasing power for silver against homes. And hopefully that's the case, because I've got a lot of silver that I would love to transfer into homes if it were to get down here. I hope it gets down there. The Saudi state may need an oil price closer to $108 per barrel this year to fund its spending once domestic investments by the Sovereign Wealth Fund are taken into account. So these are the dollars per barrel of basically what they need to balance budgets. And it's a lot of them are over $100 a barrel. Wow. Game of trades. He says history tells us it's about to get ugly. More inversion days equals deeper drawdown. We're already at 511 days. This only occurred 3 times in history. 29, 2008, 1974. What I'll say here, guys, is I don't know if that is the case. That the deeper, the more inversion days is a deeper drawdown. Was a result of a big market crash for real estate. 2008, another real estate crash. And guess what, 1974? Another real estate crash. And I'm sure some of these other ones were also real estate crashes here. The big crashes occur from the real estate market and the deleveraging of credit in the system. It is deflationary from credit destruction. I don't think we have a chance in iota to have a deleveraging event right now. We don't have the foreclosures. We don't have the crappy loans. We just don't have that. 1929 did, and so did 2008. These two bubbles are real estate bubbles that look exactly the same. The real estate market crash started to occur in 2006 and 7. This crash started to occur mid to late 1920s. And then the stock market ate it after the crash of real estate and all that deleveraging in the system. So I don't think we're like this, but that's me looking at market conditions and sharing my opinions there. That's what I'll say. Coming on back, a great company keeps working when you're not. It will eventually earn more and more and more while you're just sitting and doing nothing. And a mediocre company won't do that. So you're harnessing a long range force that will help you. It's very important, says Charlie Munger. So find good companies, sit in them, and they're going to work when you're doing nothing as an investor. You got to sit and do nothing and wait for these companies that are good to make money for you. That's what we're supposed to do as investors. Here's gold versus the NASDAQ. This is a double bottom on gold to NASDAQ ratio. We have a long way to go, up for gold, down for the NASDAQ. And we are at the double bottom, right similarly to about the year 2000. So I think that's where we're at. And I think we'll come all the way up to this resistance line here. And I think we're going to break it and go all the way back up here, potentially, with time. It's going to take some time, though. Here's another one. I says NASDAQ not looking too hot. We've got a double top here and a big selling pressure candlestick. This could also be the Batman pattern. It very well could be. It doesn't look that great to me, what I'll say. Let me put this down a little bit there. There we go. All right, we'll keep going. Q Infinity says Redfin CEO says housing is in a recession and he's never seen anything like it in 20 years as a CEO. He summarized the problems well, worth a read. I'm just going to read a little bit of this. He says last year, existing home sales fell to their lowest point in almost 30 years. The housing market froze and it's only just begun to thaw. Mortgage rates were the highest they've been in more than 20 years, and they've come down since, but are still high compared to those of the pandemic. In the past week or so, mortgage rates surged again, reaching their highest levels in months, 7.5%. Home prices are high too. The cost of buying a home has gone up again, and prices haven't come down, Kelman said. So the Fed keeps trying to tame inflation with rate increases, but at least one sector is untamable, and that is housing. It's anxiety inducing, he said. Housing is a basic need, and would-be buyers who held out for the last year are tired of waiting. Millennials who've delayed starting a family, putting off plans, can only wait so long, Kalman said. He's never seen anything like it, calling it the worst situation for the housing market. Housing is in this recession, and the rest of the economy is booming, he said. I was the CEO during the great financial crisis. Sales volume went down, but prices did too. One problem fixed another, Kelman said. Usually when sales decline, prices drop too, and then sales increase later. That's the cycle, he said. Homes become affordable again, and sales pick up because of it. This situation is very different. Interest rates are up, and sales volume has fallen through the floor, as he put it, but home prices haven't followed. Some of that is, is just this artifact of 30-year mortgages, he said. Everything the Federal Reserve is doing has no real effect on homeowners, apart from keeping them where they are. It actually has the perverse effect of keeping home prices high, is what he says. I think what is going on is that we are getting inflation not from the mortgages and lending in the system from the real estate cycle. I think we're getting it from fiscal. I think it's the fiscal side that is driving this, like the 1940s. Lynn Alden has brought that up before, and she's most likely 100% right. I think that the Federal Reserve is in a really tough position because if they lower rates, they're going to drive a housing market sales. They're going to drive inflation that comes from mortgage lending. That's the monetary side of things. So they're stuck between fiscal inflation and monetary inflation. They can raise rates to kill monetary inflation, which slows down the housing market, which we're seeing. but that also accelerates the fiscal spending and the interest expense. They're in a very difficult spot right now. Gold is obviously picking up on that. And that's why I think we're seeing gold move on up. So gold to the M2 money supply, it's making its way on up. So here's gold versus M2 money supply, and we can see it's doing a double bottom and working its way on up. And I think that we're going to hit levels that could potentially be up here. That is a possibility with a big, big move. We're also seeing gold work its way up against financial assets like the NASDAQ. It's all going to rotate, guys, with this inflation. It's all interconnected. The housing market could get stuck, though, with interest rates going up, and we could get a sticky situation in the housing market. We still have very low inventory, but the affordability is pretty rough. I agree with it. Here's the NASDAQ adjusted for the money supply. This stands in stark contrast to hard assets, which continue to be historically undervalued compared to money supply. Overall financial assets, as well as the overall size of the global assets. So this is how it works, guys. You get a big move up, and then when you start to go lower, like in 1999, when this goes lower in 1999, you see the gold price start to go up all the way to 2011. These cycles are offset from each other. This moves down into the bottom of 2011. This moves up into the top of 2011. Right now, we're at a peak for the NASDAQ against the M2 money supply. It's already all stuffed over in the NASDAQ. This is going to go down while this goes up, and money's going to rotate from financial assets into hard assets and precious metals. That is the cycle. Investment wisdom, Chuck says, my biggest investment mistakes were not buying enough of the ones that were really good, in his opinion. So if you find something that's good and you find a good entry point, in his opinion, and what he learned is he wasn't buying enough of those at the good time. It's always the toughest thing to do, though. The inflationary 1970s caused a huge rise in gold. When called the commodities bear market low back in April of 2020, also said, we are in for big inflation. I think it is time for the next historical inflationary wave. It says, yes, clearly wild chart, but quite likely. So this is gold, yearly candlesticks, big inflationary first move, second consolidation upward, and we're going to get a big, huge inflationary third bull move. It says this wild chart does say a target is $48,000 an ounce in gold, which would be the approximate number if USD M2 is backed 100%. He says this is the largest, very probable bullish rising wedge continuation halfway pattern he has ever seen. And as we've jumped on up, we can see the volume is dropping on the back test, which is perfectly normal. So here we go, guys. Gold could be putting in a monster move to the upside, and I can't even imagine what silver and platinum will do in this type of environment. Absolutely monstrous moves. We've got Shanghai silver versus COMEX silver, 31.86 versus 28.23. The pressure is still on for physical bullion to move eastward. We've got Urine here. He says, it's my thesis that the Fed is trying to not repeat its policy errors of the 1960s and 70s and to lean against the fiscal dominance. That means higher for longer until either a recession happens or inflation progresses further towards the 2-3% range. Neither seems likely at this moment. I don't think that the Federal Reserve, I think they're not going to make policy errors. I think it's just driven by the demographic. It's not a policy error. So if they're too tight on the monetary side, they're going to slow down everything. If they get a recession, what are they going to do? They're going to lower interest rates. But all of that demand is still there. So they're just going to reignite an inflationary move. You can't stop this because the demographic is the driver of it. You can't, I mean, unless you start jabbing people with stuff and trying to, take them out of the gene pool or the demographic. But, I mean, that's all you can really do. I mean, there's not much you can do if the demographic's driving it, which it is. So we're going to get inflation either now or later, depending on where the interest rates are at. QE Infinity says, who is the heck is going to want to hold stocks over the weekend? Tomorrow could be a complete bloodbath. Well, I'll just say this, guys. Fear is what gets people to sell stocks. And this is fear. That is what fear looks like. I'm going to hold everything I've got through the weekend. I don't care, but I'm long commodities because they're cheap. I'm in all the cheap assets, and that's exactly where I want to be. I want to be in cheap assets, and I don't want to sell them. I want to hold on to them until they become overvalued. That's my strategy right there. Bam. John Flynn says real estate prices don't go down by building more homes. Okay, buddy. Prices go down when you can't sell the ones you've already built, and investors go belly up. Investors' inventory is then liquidated at lower. Yeah, well, yeah, that's you build too many homes, and they've already been built, and investors go belly up. Correct. That is correct. But you have to build the homes first. So real estate prices do go down when you overbuild. They've already been built, and the investors go belly up. Totally agree. Yes, that is correct. We've got super microcomputer, SMCI, is now the most overvalued stock in the S&P 500 according to FactSet. Yeah, probably. And it looks like CRAP. It looks like crap. It's ready to move lower, in my opinion. Here's Ian Castle. He says the amount of work you do on an investment often correlates with the amount of volatility that you're willing to endure. It isn't a stairway to heaven, it's a roller coaster. I agree. You're going to have pullbacks no matter what, and you're going to have big pullbacks, 50% plus, and you have to do the work. You have to know what you own. If you don't know what you own, you're not going to put up with the volatility. You're going to sell out, and you're going to say, "Oh, I can't handle the volatility." It's like you don't know what you own. That's why you can't handle it. Totally agree. This looks like those March curtailments have become April curtailments, and we're seeing dry gas production continue to fall. And there's your deficits here, and your changes, I should say. Power burn up 5.5% year to date. That looks pretty solid for power burn of 2024 versus the previous years. So we are continuing to add and burn more natural gas for electricity generation. And there it is for your change, your delta over last year. Art says Ryada will require an average oil price of $96.20 a barrel to balance its budget. That's up 21% from a previous forecast in October. Wow. So we're getting close to $100 to balance budgets there. Patrick Karam, almost 140 years of the S&P 500 priced in crude oil. I'll let you guess where this is heading. I like this chart, guys. I really do. Let me make sure I get this all in there for you guys, and I'll make some comments here. So this is the U.S. stock market priced in energy. So when you look at it, we had a huge boom from the 1800s, 1885, all the way up to the peak of 1999. 1999 peak here. Then we rolled over from 1999 on lower. So notice that in the 1970s was back here. It's kind of crammed up here. And it was only just a short move lower. It wasn't a huge sustained move lower. And then we quickly turned around in 1982 and worked our way all the way back up. In 99, we have a big double bottom here. So, or I should say a double top. A double top here, 1, 2, and then we pulled all the way back down into 2008. 2007 peaked in oil versus SPX. In 2008, double bottom, worked our way back up. This is our shale oil play here. Then we've got another big peak here. Peak 1, peak 2, double top. We're coming on back, 2020. Oil prices went negative. We shut down the economy. We were probably going to peak somewhere earlier than that, but came all the way back down. We're coming back up in a counter trend move. And then we've broken to the downside here. Big downside. Failed bear market rally in the cloud here, and we've broken down of this support zone. We're probably going to head all the way back down to this bottom here, where energy is going to outperform stocks. That occurs in inflationary cycles. So this is going to be a really, really big move, I think, where uranium, silver, oil, all those things are going to outperform coming up. So I really like this chart. Good work, Patrick Karam, for the chart here. I like the 138 years worth of data here too. And this does look very good for energy and a commodity bull market to be moving on up. So that's where I'll end it for today, guys. That's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We still have the coupon code LEAP going on if you'd like to join. We've got a Sunday question and answer session coming up at 5 p.m. Mountain Standard Time. So we'll see you guys there. And that's all I've got for today. Catch you next time. This is Finding Value.